Apple, or Amazon is today. And right now, no one's talking about them yet. Most people learn investing from the outside looking in. I've spent over a decade on the inside watching how capital moves and what separates companies that scale from the ones that don't. That's the lens I bring to this series. So if you're watching this and you feel like you missed the boat on Apple, Amazon, or Microsoft, this video is going to change that completely. The next Apple exists right now. The question is whether you're positioned to find it. And the wheel just landed on exactly where to look. Small cap and mid cap growth, the same category that builds some of the biggest fortunes in investing history. And honestly, this is the category most people your age wish they had understood 10 years earlier, because Apple was once a small cap, Amazon was once a small cap, and Microsoft was once a small cap. So if you invested $1,000 in Apple the year it went public, today that would be worth $1.4 million. And if you invested $1,000 in Amazon at its IPO, today you'd be looking at over $2.4 million. Let that sit for a second. That's not a lottery ticket. That's one decision held with patience in the right category. And the hardest part, it was available to everyone. Most people just didn't know where to look. Those numbers exist because those companies were obsessed with one thing: growth. That's exactly the kind of opportunity I'm here to break down and invest in. I'm investing my way from 10 to 1 million using my own money and my corporate finance background. So if you're serious about building wealth rather than wasting time watching random finance videos, subscribe and hit the bell. Stick with me because what I'm about to break down next is the part most financial channels never show you. The investors who built life-changing wealth didn't find Apple at 3 trillion. They found it when it was small and unproven, when everyone else was looking somewhere else. That's not luck. That's what happens when you know how to research and analyze small and mid-cap growth companies based on their financials. So what did those early investors actually see that everyone else missed? Well, it comes down to 5 things I look for in every small cap growth company I research. Number 1, revenue growth rate. Is the company growing revenue at 20% or more year over year? That's the baseline. Number 2, reinvestment behavior. Is the company putting money back into the business instead of paying dividends? Small cap growth companies don't pay dividends, they build. Number 3, total addressable market. Is the market they're going after massive enough to support decades of growth? Apple wasn't just selling computers, they were positioning for every personal device on the planet. And Amazon wasn't just selling books, they were building the infrastructure for all global commerce. The company has to be chasing a market so big that even capturing a small piece of it creates enormous value. Number 4, founder or leadership obsession. Is the person running this company building something or managing something? There's a difference. Number 5, financial health. Can they survive long enough to win? Because a great company with a terrible balance sheet loses. And later in this series, I'll be analyzing real company financials the exact same way I did inside Marriott and Hilton. And I'll show you exactly what to look for. Market cap just means the total size of a company's value on the market. For example, large cap is over 10 billion. Think Apple, Amazon, Microsoft. Proven companies, stable and slower growth. I discussed this asset category in a previous episode, which I'll link below. Mid-cap is 2 billion to 10 billion, established but still expanding fast. And small cap is 300 million to 2 billion. Now add growth, and you're just talking about companies that are reinvesting everything back into expansion. Let me put this category into context. Every asset sits somewhere on a risk scale. Small cap and mid cap growth is high risk. Now let's talk about what you get in return for that risk. Small cap and mid cap growth is also high reward. This is where the needle moves. Historically, the highest returning asset category over long time horizons. The same reason the risk is high is the exact same reason the reward is high. Small and mid-cap growth stocks are volatile. In a bull market, they can dramatically outperform everything else in your portfolio. In a recession or bear market, they can fall harder and faster than large caps. Why? Because smaller companies have less cash, less pricing power, and less ability to weather a downturn. When the market panics, small caps feel it first and feel it hardest. That moment when your portfolio drops and everything in you wants to sell. That moment is exactly where most investors lose. Not because the category failed them, because they weren't prepared for how it would feel. So, if you're the kind of investor who checks your portfolio every day and loses sleep when it drops, this category requires a real conversation about your risk tolerance. Here's what that risk actually buys you: the idea that investors are rewarded over time for taking on that extra risk. That's not a guarantee, it's a historic pattern. And in investing, patterns over decades matter. Investing in small or mid cap growth is a legitimate research backed category that belongs in long term portfolios. This question shouldn't be whether you should have it, it's about how much is right for you based on your risk tolerance. Building a portfolio isn't about knowing everything at once. It's about understanding one category until the whole picture starts to make sense. That's why I'm teaching this series, one episode at a time. I've had a conversation with people who didn't pay attention to the next big thing because they didn't understand this category. They weren't unlucky, they were just uninformed. That's what today is about. And if you're sitting there right now thinking, I want to start investing, but I don't know how to get my money organized first. I help a limited number of people one-on-one every month, but I only take 10 calls a month so I can give each person real attention. The link is in the description below. And when those spots are gone, they're gone. So here's my challenge to you. If you haven't started investing yet, go back to my very first episode of this series where I invest just $10. Then think about the portfolio that you want to build. Where does small and mid cap growth fit for you? What percentage makes sense given your age, your risk tolerance, your timeline? And if you're not sure, that's where that one-on-one clarity session with me can help. Thinking what type of portfolio you want to build before next week will make the investment decision land a lot harder when you see it. Now, I have to tell you something. This is part 1 of a 2-episode series, and next week I'm putting real money in. Second, I'll research different small and mid-cap growth companies along with small and mid-cap index funds. Then I'll invest my own money and make an investment, all in real time. So stay tuned next week, subscribe and hit that bell. You won't want to miss exactly where I invest next and why. See you next week.